is probably what the Devo is going to be about this morning is, she really seems to have a forgiving spirit, because many of us would be out of sort and could not laugh about it at all. So the Devo this morning is concerning, forgiveness. I know many of us are many of us on this call are givers, and we seem to have no problem with giving to, the shelters and other well known charities. But the spirit of forgiveness is something I wanted to talk about, this morning, and it comes from uh, Matthew the 18th chapter. And to set this up is that during the times of the Old Testament, the kind of the law or the feeling was an eye for an eye and a tooth for a tooth. If you knocked my eye out, I had the opportunity to go back and do that to you. And if you broke my tooth, I had the same opportunity to do that to you. So it was always one of getting back. And some people have been raised in families where the kids were told, if he hit you, you hit him back. Whatever that person does to you, you do it back to them. And if I find out you didn't retaliate and do something to them, when you get home, I'm going to do whatever they did to you, and I'm going to do it to that. So that there was a lot of teaching in our society, and especially certain neighborhoods, that you had to grow up very, very quick, or if not, you were considered to be taken advantage of. So Peter came to Jesus, and Peter asked a question. He said, "How many times should I forgive my brother?" And Peter came up with the number 7. Well, at that time, with the rabbis, it really was maybe one time, the most maybe 2. And so Peter, thinking that he was really good, came up with the number 7. And as we know, the number 7 in Scripture is kind of like a perfect number. So he thought, Lord, should I forgive someone 7 times? And then Jesus answered. He said, not 7 times, but 77 times. And so with that, his disciples were really puzzled. 77 times. And so Jesus tells this parable. He said, therefore, the kingdom of heaven is like a king who wanted to settle accounts with his servants. As he began the settlement, a man who owed him 10,000 bags of gold was brought to him. Since he was not able to pay, the master ordered that he and his wife and his children and all that he had be sold to repay the debt. At this time, the servant fell on his knees before him. Be patient with me, he begged, and I will pay back everything. The servant master took pity on him, canceled the debt, and let him go. But when that servant went out, he found one of his fellow servants who owed him 100 silver coins. He grabbed him and began to choke him. Pay back what you owe me, he demanded. His fellow servants fell on his knees and begged him, be patient with me and I will pay it back. But he refused. Instead, he went off and had the man thrown into prison until he could pay the debt. When the other servants saw what had happened, they were outraged and went and told their master everything that had happened. Then the master called the servant in. You wicked servant, he said, I cancel all that debt of yours because you begged me to. Shouldn't you have had mercy on your fellow servants just as I had on you? In anger, his master handed him over to the jailer to be tortured until he should pay back all he owed. This is how my heavenly Father will treat each of you unless you forgive your brother or sister from your heart. I mean, this is really a heavy story, but it's just one that forgiveness is something that we just don't measure out as quickly as we do our giving. Something happened to us, someone did something to us, someone said something to us, and it's something that we feel we hold on. And many times more in the Christian fellowship than it is in the world. We just decide we're not going to forgive this person, we're not going to pray for them, we're not going to help them, we're not going to do anything else for them. But Jesus paints this portrait. He said, unless you forgive your brother, neither will I forgive you. And so this this unforgiveness that's inside of us is like a cancer. It will eat us up. It will destroy us more than it would be to the person who has done something wrong to us. So I just want to encourage you, as I encourage me, is that we have to let it go, leave it alone, and really sincerely forgive those who have trespassed against us, not only for them, but more so for you. Because if you are heaven bound, and if you're on heaven's highway, and you have these unforgiven spirits that you still fester up on, these are going to destroy you. It's going to take your walk away. It's going to take your testimony away. It's going to destroy everything that you felt like you have accomplished. So I want to encourage us, as I encourage me, just go through our spirit and just find out who has done something, said something, whatever in our lives, turn it loose, give it away, and reconcile it as best as you can to the person who has offended you. Let's bow. Gracious Father, you are so kind. And I know every day in my life, I say something or feel something or think something. And Lord, I just have to come back at the end of the day or whenever and say, Lord, please forgive me. And I always say, I won't do it again. And the next day I'm saying the same prayer. And so you have been so kind and merciful to us. And Father, let us be like you, that when others come to us and ask for forgiveness, that we forgive them. And even when they don't ask for forgiveness, Father, let us not hold that as a grudge or something that will destroy us and take away our fellowship and our testimony. And so, Father, we just lift you up this morning through your Son, Jesus, our Christ. Amen.
Can you hear me?
I can now.
Okay, good. So thank you so much for that. And, you know, I love the way that you think I laughed my way through this whole thing. The first time that they broke into my house, I was able to laugh through it because I was so amazed. The second time I might have lost my composure just a little. I'm pretty sure I was heaping some hot coals through my thoughts that second time. But Sue talked me off the ledge and I was able to actually pray for them, which was really hard. You know, it was one of those prayers, you know, God, you know, I don't mean a word I'm about to say, but I'm going to ask you to help me feel this. It was very, very interesting.
You know, you can forgive somebody, but it does not release them from the consequences of their actions.
Yeah, that's well said, Don, and that's why they're still in jail. Well said. Thank you so much. Thank you, Tom. Okay, Bryan, I don't want to take up any more of your time because you've got some great information for us. You're going to have to unmute. You're still muted up. Of course, Bryan unknowingly put himself in my path this week. So he's speaking this week. He was coming up with the PowerPoint for another event and I jumped on it. So, Bryan, I'm just going to let you start talking, my friend.
Very, very cool. Yeah, I got a text. Bill had a slight speaker change last minute and he texted me. He's like, hey, could you just give us a 20-minute update on the mortgage industry? Tomorrow I need to fill some time. And I was like, I actually have this presentation that I just put together. So I could do that. And he was like, oh, that'd be great. I didn't want to impose. So, and then Wendy's like, hey, can you do that same presentation on Friday? I'm like, sure. So I need to do the rounds. I need to reach out to the other subgroup leaders if they need some content. But it is really good content. And Wendy, always great to have a chance to talk with you and with everybody on the group. And if you've got questions, I'm going to try to run through because I know we'd like to get out of here on time. So I'm going to run through this information pretty high level. And if you've got questions, just stop me. I'd rather spend the time on what you want to know about instead of what I want to talk about. So it's for you, really. So take control and ask questions, and I'm here. Wendy, if I don't see the chat pop up, let me know, because I've got a couple screens going.
Okay, so let me ask this question. Are you, what kind of microphone are you using?
It's on the webcam. Is it really bad?
Okay, it sounds like there's wind blowing, but that's okay.
That's the air conditioner that's right above that is cranking this morning, and I don't know why it's so.
Okay, no worries. Keep going. I can hear you. Can everybody else hear? Okay, they're all shaking their heads. Yes. Okay.
Awesome. So if I'm allowed to share my screen, I will do that.
You should be. Yep.
And if you want to see the screen instead of everybody at the top right of where you're seeing the pictures, you can switch from gallery view to speaker view, and then you should be able to see the screen that I'm sharing. I think, am I sharing a screen?
Yes, you are, and you are also correct with the directions.
All right, you're seeing the screen that's up?
Yep.
All right.
Yep.
So we're going to go over real quickly just a couple of ways to hack the mortgage guidelines, right? So we try to hack homes, we try to take advantage of rules and guidelines. And so I've picked out a couple of guidelines that help investors out. And I know a lot of people in this room, and thank you for listening. And if you've heard me do this presentation real recently, it's not changed a lot, but if you've got something that you want to ask, please do so. So last year was a tremendously crazy year. Talk about blessings beyond control. Really, we were just hanging on and trying not to fall off the rodeo, because it would hurt if you fell off. And there was a lot of times where we were, kind of dragging along the edge and doing what we could to keep up. But this year so far, it's really not changed a lot. The inventory is much different and the rates are a little bit higher, but we're still doing crazy things. And I've got some staff now to help, so I'm not being buried and underwater. So we've added 4 people to the team this year. I just got a junior loan officer that works for us in Winter Park to agree to be a part-time junior loan officer for my team, who's bilingual. So he has a bilingual processor. I'm able to help clients that I couldn't help before, which is fantastic. I don't like language to be in the way at all, ever. Last year, we ended up closing 405 loans for about $101 million. Thank you to everybody who gave me the opportunity to help you. Sorry that it was slow. That was partly us, but really with the whole industry tripling in volume in a couple of months, nobody could keep up with that. So we did all that we could to close people as timely as possible. But man, there was a couple of weeks. Underwriting was 3 weeks just to get out of underwriting. It was crazy. I've picked up a couple of new state licenses. Last year I picked up Tennessee, Alabama, and Michigan. And then this year so far I've picked up California. And we've got a couple of new states that we should get. I'm thinking the next 3 will be first quarter next year. So coming soon seems to be longer than it originally was. I am an investor. I have short-term rentals. I have a self-directed IRA. I don't interact with people that I ever talk to mortgages with my IRA. Right now, my IRA is destined to invest into cryptocurrency. I'm just waiting for a decent drop, which we haven't had. I missed the last drop, but still a big fan of crypto. So today, we're going to go over the home opportunity mortgage. We're going to go over how to buy second homes as investment properties and primary homes as investment properties. And at the end, we'll go over a little bit of industry update on what's going on in the marketplace, which is fascinating. So home opportunity mortgage, this is an unofficial name. It's kind of adopted in the mortgage industry, but there's no predefined guideline. You can't look at this exact thing. You'll see a lot of people talk about it online if you Google home opportunity mortgage. But what this does is it lets you buy a house for your parents. So Fannie Mae looks at homes as either owner occupied or non-owner occupied. If it's non-owner occupied, it's either a second home or investment property. So those are the paths that we can go down. What this mortgage lets us do is buy a property for investment if we're going to put our parents in it and not have to pay the investor rates and the investor down payment. You can actually buy it as a primary residence, which right now best rates are around between 3 and 3.25, depending on the day. And you can do as little as 5% down. The parents do not have to be on the mortgage. They just have to not qualify for a mortgage. So if you're trying to move your parents closer and they can't purchase on their own, you have to prove that they're not able to purchase a home, and then you can buy it as a primary residence. They're not on the mortgage, they're not on the deed, it's in your name. if they're qualified, put them as a co-borrower. We don't have to jump through anything fancy. We don't have to prove that they don't qualify. So if they've got decent credit, even if they don't have income, they can be on the loan and that's still owner occupied. This allows you to have them not be on the loan. So the other advantage for investors is you can always buy a primary residence. And I'll say that a couple times because everybody hears, oh, I can only have 7 mortgages or 10 mortgages or whatever they think the limit is. And 10 is the limit mortgage properties, unless you're buying a primary residence. There's no guidelines that restrict you from ever buying a primary residence. So you could have 15 mortgages and go get a new one for mom and dad. So nice little hack, ability to take advantage of lower rates and lower down payment.
Wow.
Second hack is second homes. And this, my wife and I started doing last year. Rates started dropping. And I told my wife, I want to go get a couple $1 million in debt because this is a once in a lifetime opportunity to get rates, you know, stupid low. And we got a couple under 3%, which was fantastic. But if you're going to buy an investment property, you don't have restriction on how to use that property. You can put a long-term tenant in there. You can put a short-term tenant in there. You can just sit on it and hold it and speculate. You don't have to have it be occupied ever. Second homes have a little bit of restriction in that you have to use the home some of the year, and they don't define some beyond some. I had an underwriter really tell me, oh, it's got to be this percentage. And I said, where is it in the guideline? You need any percentage. It just says some. And she was a team lead and I won out that battle. And it doesn't have to be a certain amount of miles away from you either. Some people will say 50 miles, 75 miles, 100 miles. There's no exact guideline that says how far away the house has to be. What it can't be is in the neighborhood that you're in the community that you're in. It has to make sense. There has to be a reason that you would get away to this property. So typically, if it's close in proximity to your primary residence, it's going to be a destination, right? It's going to be on the water. It's going to be on the beach. It's going to be in the mountains. It's going to be in the woods. It's going to be away, right? This is a getaway. You are 100% allowed to rent out a second home. There is no restriction to that. There's no downside. You're allowed to say it. You're allowed to get commercial insurance on the property if you're going to do rental, and that's what your insurance agent advises. I've got a lot of underwriters that say, oh, you can't do this because it's got commercial insurance on there. I said, well, there's no guideline that says you can't use commercial insurance on a second home. Show me the guideline. It's all about what the guidelines exactly say. So 10% down, investment properties is 15 to 20%. Today's best rate, oh, I have an extra 7 in there. Today's best rate is about 3.5 or 3.375. So ignore that 3.575. That kind of shouldn't look like that. I was trying to update these slides right before I did this because I did this presentation a couple nights ago and there was some wrong information and now it looks silly. Investment best rates is 4.625. And a lot of times with points, and we'll talk about why investment is so high right now. There is a limit of 10 properties that you can finance if it's a second home. This does have the guideline that's got a restriction for number of properties. And again, it should not be real local. I live in Waxhaw. I probably can't buy a house in Concord if it's in the neighborhood. It just doesn't make sense, right? I probably can't buy a house in Gastonia that's in the middle of a neighborhood. It just doesn't make sense. I probably could buy a condo downtown and call that a second home because I want to go there for sporting events and for nightlife and whatever. That probably can make sense. So you got to tell the story, and the underwriter has discretion on this. So if it makes sense, it's a second home. If it doesn't make sense, it's investment. The other difference in the two properties is if you're buying an investment property, we can use rental income to support that acquisition. We can even use projected rental income on an investment property. So the appraiser will do a market rent analysis. And if they say, hey, this house should rent for $2,000 a month, you can use 75% of that as your income to qualify. So if you're doing a second home, you have to qualify for the new debt on your current income. You can use other rental property income. You can use self-employed income, Social Security, any types of income you have, but you cannot use the rental income from the subject property. Same with the refinance. If you're refinancing a house as a second home, you've got to qualify without the income that it produces. So I had a client that he did a 1031 exchange from a investment property in Arizona, bought 2 properties in North Carolina, and bought them both as investment because he had to with the 1031. It says this is an investment property. So we had to buy those as investment. 6 months later, we refinanced them as second homes because one was at the lake and one was in the mountains. And his income qualified without the rental income for those two houses. So we were able to significantly drop his rate by reclassifying the house in Fannie Mae's terms. It doesn't mean you can't earn income. It doesn't mean you can't file taxes showing income. We actually had tax returns from him showing income on these properties. And underwriting was like, "Are you sure this is a second home?" I said, "Yeah, it meets the definition. They've occupied it some. They have it furnished, and there's no long-term tenant in there, so they're allowed to." And I was refinancing both of them at the same time. And this underwriter really didn't like that we were doing 2 second homes at the same time. You can't have more than 1 second home. I said, "Where's the guideline that says that?" There's no guideline to say how many second homes you can have. They're not next to each other. And even if they were, I think I could have won that battle because, hey, sometimes this house is occupied, so I got to stay in the other one. So I bet we would win that conversation, but there is a little underwriter discretion, but it comes back to what's the guidelines say and show me where it says we can't do this. So we won that battle. So if it makes sense, buy it as a second home. 10% down to me means I can buy 2 of them instead of 20% down on a long-term rental investment property. If you need the income, we just flip it back to investment property, slightly higher rate. Honestly, if you're going to do Airbnb, the rate shouldn't matter in your profitability that much, right? It should be a very minor part of the equation if you're doing it right. Right, Wendy?
This is why you need to use a mortgage broker that totally understands the underwriting side. This is beautiful.
Thanks. Yeah, I really did dive into guidelines, and underwriters sometimes don't like that because that's my job. No, I told an underwriter, she was like, "How do you know so much?" I said, "I closed 400 loans. I had to put together 1,200 loans, right? 800 of those never closed. They couldn't find a property. They didn't qualify. But I put together more loans than underwriters see. They see the final product. I got to figure out how to make it work every time. I dig deep into guidelines. That's how you win deals. That's how you help people."
That's obvious.
So the last hack that I wanted to tell you guys, and again, there's no guideline in this. There's no way for you to know this unless some creative mortgage person says, "Hey, did you know?" But you can buy a primary home as an investment property. How do you do that, Brian? You put somebody in the house and on the loan that's going to live there for 12 months. That is a definition of primary residence, or owner occupied is one of the applicants who's also an owner of the property, so they're on the deed, is going to occupy it for 12 months. I love saying students because it makes it very easy. A student has no income, they have no debt, they have no credit score. If they're 18, hopefully, right? So as long as they're legally allowed to be on the application, not having income, as long as your income supports the purchase, is fine. As long as you have decent credit, they don't have to have a score at all. It's fine. I had an underwriter that kept changing the guidelines and say, "Oh, if there's no credit score, you have to use a 200 as a credit score," which changes the pricing drastically. And I said, "No, it doesn't say that anywhere. It says that one borrower has to have a score for Freddie Mac and Fannie Mae." So we won that, and you get the best rates. If you do 3% down, if one of the buyers is a first-time home buyer, you can always do 3% down. Now, a 3% down mortgage does have a slightly higher rate than 5% or more. Usually it's about 3/8 of a point higher if it's the 3% down option. So
And this also is for a 2 to 4 unit, right?
No, that's going to be different. That's good though. 2 to 4 unit, you're going to go FHA and you can do 3.5% down with FHA, but the student has to have income. There's much different guidelines if the student doesn't have income or a credit score on FHA. It's much, much different.
Gotcha. Now we do have a question. Can you lend in Florida?
I can lend in Florida.
Okay.
Yes. Good question. And
Are these second home as investment loans available in all states? Yes, it's federal, right?
it's standard Fannie Mae guideline.
Yeah.
So
Okay.
as long as your broker knows about it, you can do it. If they don't know about it, you don't get it.
Oh,
So
Bryan.
you're good. You're as good as the knowledge of the person that's going to help you out.
That's right. That's
Um,
right.
So primary residence, put a student in there. They have to live there for 12 months. Now, listen, I like the college scenario. They're going to move every year, 4 years down the road. If the school doesn't say you have to be in student housing for the first year, maybe send them to community college for a year so they can live in your house and help grow equity for you and for them. Once they have a credit score, the lower of the two scores is going to determine the rate on loans. But even if they don't have great credit, you can overcome their credit, and the rate is still going to be cheaper than if you went investment, even if they've got a 620 or a 640. Now, the PMI could really suck a lot if they have a 620 or 640 credit score. If you're not putting 20% down, you could be paying several $100s a month in PMI. So that product hurts a lot. But getting an approval, you have to have at least a 620 credit score for conventional, and your credit score can overcome their credit needs. But then everybody has to qualify. No credit score is actually perfect, and there's no limit number of properties you can get because it's a primary residence. You can always buy a primary residence. So,
and you can have two primaries. That's what blows my mind. You can have two primary residents, one that you live in.
5 primary residences this year. One for me, one for my mom, one for my son, one for my dad, right? I could buy 10 primary residences this year. I can buy as many as I can put 3 or 5% down on.
Wow.
And my income has to afford it, right? Because primary residence, no rental income. So your income has to qualify to get this. Now, once they're in the house hack it. Have them rent out 3 of the rooms and have those roommates be paying the mortgage for your student. Now your student gets reduced or free living, and you get a write-off. The primary residence is a Fannie Mae designation. It's not an IRS designation. If you're treating this as an investment property, the IRS will let you depreciate that puppy. Talk to a CPA. I'm probably going to get in trouble for even advising that you should talk to a CPA because someone will get mad at that. Right, Wendy? You can't do right ever.
That's right. Just say your mileage may vary, and that's kind
exactly. Yeah, just figure out what they're going to allow. There was a really cute TikTok video, but it links to YouTube, and my company internet blocks it, so we can't watch it. But it was kids walking in, like it was a parent walking in, like it was a kid walking into the house, like just dropping crap and knocking stuff over. It was fun.
I've seen that one. It is funny.
It is funny, but I can't play it for you. Sorry. So, primary home, as many as you want. I'm a big fan of doing this. I had saved a couple of deals over the years where people couldn't get the debt to income right, or they didn't have enough money for down payment. And it's like, just put your kid on the house, and then it changes the guidelines tremendously. And they're like, why didn't my last broker tell me that? So they didn't know. They didn't think of it. Typically, it's going to be family, but it doesn't have to be. It does not have to be family. There's no guideline that says it has to be family. But typically, we're going to see there's a real good relationship between you and the student or the person. They could be 45, right? It could be your brother who didn't have credit forever and was off the grid, and they don't have to be a student. It could be any age for the co-borrower. Just somebody has to be in the house for 12 months.
Gotcha. Brian K has a question for you. Brian, there you are.
I am. Hey, good morning, guys.
Hey.
Good morning.
Hey, I like the word that you've used a lot in your talk, battle. And as a fellow lender, I don't think everyone understands that these guidelines are not necessarily written in black and white. It's a discussion, it's a conversation with what's acceptable. So we actually tried to help a fellow Sonriser with a refinance a while ago, and the issue was this. I'll give you a quick scenario, and I think it pertains to investing. So he had a lot of properties. He has more than 10. Let's say he's got 15 properties, but he only had 3 loans on it. I'm oversimplifying a little bit. So 15 properties, but only 3 loans. Now, I've heard before, and I don't know if other investors have heard before it, when you're acquiring investment properties, I'll get pitched by, say, commercial lenders that say, well, when you reach the Fannie Mae limit of 10 finance properties, you come back, you get a commercial blanket loan, frees you up to get more Fannie Mae properties, right? And so our support desk came back, and I'll read it to you verbatim because it's quick. It says, I was able to confirm for each 1 to 4 family investment property that the borrower owns, if they are encumbered by a blanket loan, they are still each counted as a finance property. So it's not the number of loans out there, it's the number of properties that have a lien on them. So if one loan covers 4 properties, you have 4 finance properties. I was just curious, your take on that. Do you agree with that? Have you heard the same house hack recommendation? And what's your opinion on that?
Yeah, no, that is, so Fannie Mae guidelines, they don't say number of houses with mortgages. They don't say number of mortgages. They say number of financed properties. It could be a commercial property. It could be a piece of land. It's financed properties, right? So the definition is, does it have financing and is it a property? Now, if the asset is in an LLC and the debt is in an LLC, then you could argue this client doesn't have 4 financed properties. They have 1, their primary, everything else is in their LLC. Now, you could get an underwriter that asks to see the note, and technically if they are have a personal guarantee on that note, then it does count because they now are liable for financing. So Fannie Mae will count if you're the debtor on the financed property, that counts against you, or if you're the deed holder that has a finance and a commercial name, it's still your property. So they'll count both of those against you, and a personal guarantee can count against you as well. In my experience, as long as you transfer those properties off of your taxes, so they're not on your Schedule E and they're reporting over on an 8825 on your LLC docs, your 1065 or your 1120S, then typically you're not going to have an underwriter ask for the note if they don't need to prove the transition, right? But if I have 2019 tax returns with a bunch of Schedule E properties and I'm trying to tell underwriting, no, these don't count because he refinanced it into a commercial loan and he redeeded the properties, they have every right to ask for that note. And if that note says you're a personal guarantee, then they do count against you for the guidelines technically. You just don't oftentimes see them ask for that if it's, you know, if you're not proving the transition. So get them off, wait a year, maybe wait 2 years, and then hopefully they don't ask for the notes. And then you should be able to do that trick where you can go get 10 more.
Awesome. Andre has a question, then I have another one right after that.
Hey, Bryan. On the second hack, you were mentioning that that for underwriting purposes, future investment income can be used on the property that you're thinking about buying or that you have in a contract.
On the second hack, you cannot use future investment property if you do it as a second home. If you purchase a property as an investment property and you're an experienced investor or have a history of housing payments, then you can use 75% of the future rental income of the property you're acquiring.
Okay, so you have to have history of being a landlord prior to.
Or housing payments. It says in the guidelines either one of those. So if you have had a mortgage for a year, or if you had rental property, you don't have to have a current mortgage. You could rent your own primary, but you're an experienced investor, which means you have tax returns showing rental history.
Okay.
Then you can use 75% of the future rental income. Now, it's based on a market rent analysis, which is an annual rent analysis. So if you were going to do long-term rental, if you're buying a property for Airbnb, the goal is you're going to earn 2, 3, 4 times what you would on a long-term rental, but we can't use that future project. You can't say, well, my analysis says I'm going to make 100 grand on this property, and you can't use 75% of that. The rent's based on long-term rent projections. And honestly, if you're buying a second home or something to Airbnb, it should cash flow as an annual rent in case you have policy.
Amen.
Yeah. Okay, so if I'm looking at a property for investment purposes, I can use the future income that the property is going to generate as a long-term rental to qualify if needed, because I've never heard this before. I thought that you could just use your current income and that was it.
You can use the future rental income. So if you qualified to buy your primary residence, you should, on most cases, qualify to buy an investment property based on income, because the new property should be offset by the rent that it's producing, as long as you're not overpaying, right?
Yeah.
Now, the biggest limitation investors have on buying more property is the money down. On an investment property, you cannot get a gift. You have to have that money seasoned in your account, or you can borrow against assets. You cannot do an unsecured loan, but you can do a line of credit on your house. You can refinance your car and do a cash out refinance. You can put a lien on a car for the first time if you bought it with cash. Those are liens against your own asset. That money can count as down payment.
Yeah.
But you cannot get gift money for investment purchases. You can get gift money for a home purchase. So you don't have to have any cash. Somebody else can gift you that money, but on an investment property, you can't get gifted. So if you qualified for your primary income-wise, you should qualify for the investment purchase.
Awesome. Good
Thank you.
stuff. Good stuff. Thank you. As y'all can tell, Andre has 400 kids in his house. They're all his.
Sorry about that.
No worries.
They came in right as I was unmuted.
That's no worries. Okay, so there's somebody else that has their hand up. It just says iPhone, so I don't know who it is.
Hi, it's Roberta Griner. How are you?
Good, Roberta. Thanks.
So I have a unique situation. I have spent a lot of time researching it and I'm still kind of stuck. So my plan was to get a few more mortgages under my husband because I'm a 1099 since I'm doing investing full time.
Yeah.
He got a really amazing opportunity and left his job, which was a W-2. And that completely derailed our plans because he's only going to make a very small amount on his W-2. And then the rest is going to be 1099. We have pretty high credit score, both above 800. But he's going to qualify for the 1-year exception next year. But right now I'm kind of stuck. I mean, I have cash to buy one deal, but I really would rather try to get mortgage, but I don't see any option given that his W-2 is going to be like ridiculously low. It wouldn't even qualify for our primary if you just look at his W-2.
Yeah. So you've got a couple of options going forward, but yes, if you leave a W-2 job and you get a commission-based job, or if you go to self-employment, which is a 1099, you do need to have a 2-year history and average of those incomes before they will qualify. When I left the retail bank to become a mortgage loan officer, I was excluded for 2 years. I needed to build that 2-year average up. So I've been in that boat and will be in that boat at some point again, probably. But there are a couple of products that could help you right away. One is doing a non-QM. QM is qualified mortgage, which tells us how to qualify the income tax returns. So you could do a non-QM loan, which would allow you to do bank statements to verify income. Your rates are usually going to be, I would guess, 2 to 4% higher than normal rates. And there's a lot of times some upfront fees and some prepayment penalties on those types of products. But you could Google non-QM mortgage and find the several lenders. A couple that you could write down would be Angel Oak, Oak Tree Funding, Citadel. Those are the biggest ones that I see. I'm sure there's a couple more. Brian, if you've got a couple more, put them in that chat. But I would just Google non-QM loans and you'll find some opportunities to do bank
If we
statements.
do them at Carolina Hard Money, we can get rates down into the 4.5 range now for
Nice.
long-term funding. So tell all your friends.
So you could Google Carolina Hard Money.
Yeah.
And find
That's a great question. And we've got so little time and everybody's throwing questions at us. And I don't want to make your presentation any shorter because you've got so much to share with us, which means you probably need to come back. But here's a question. Can one member of a married couple qualify for a second primary home?
I've done it. It's awkward. When you do that, you have to include the housing expense of the other spouse. So I had a couple, they lived in New York. Husband was going to stay in New York. They were renting and she was going to buy a primary residence. For a conventional loan, they were able to do that and have them both on the loan. We just had to count rent from the husband, remaining in New York, and the wife moved down here. Now they wrote a letter of explanation. He's traveling back and forth to see the family, but he couldn't give up his job. And this was pre-COVID where you actually had to show up places. Nowadays you can just zoom in to wherever. So I've done that. Now, if you're doing the loan with FHA really wanted the primary income earner to live in the house for at least 181 days. So I had that situation not work because it was an FHA product. The spouse didn't work and they didn't accept that the primary breadwinner was not going to live in that house full time. So we had to convert that one back to conventional as well. So you can, with the right explanation, it's not common, but it's not too uncommon either.
Gotcha. Okay, let's let you move forward on a couple of slots. I'm watching the chat box here for you.
All right. So I wanted just to talk about inflation and interest rates and what's going on in the marketplace, and they're all kind of interrelated. So this chart is very busy, but it just shows some major news events and what's happened to interest rates in relationship for the Fed in relationship to where inflation was, and kind of show you how inflation during different news events really spikes and has big dips as well. And that news really changes interest rates. Last year, we saw rates going up and down some days 2 or 3% in a single day because the market was real broken in March and April with liquidity. And if you look at how the government reports inflation, they use a 12-month rolling average, and it's called the core CPI numbers. And last year, if you remember, we shut down, right? We weren't producing anything. Everybody stayed at home. We were all scared. And we had some negative inflation numbers that we used for our inflation. Now, there are signs of serious inflation right now, especially with new construction, with the home prices and different real estate related businesses. But a lot of the core CPI numbers, they're not great inflation storytellers. And if you look at a 12-month average, you can see on this chart, this was the last 12 months and for the last year and what the interest inflation numbers were that they compiled together. So we had a 1.3% inflation based on each month's rolling average. Well, March rolled around and we saw, first off, March rates went up every single day of March almost. February rates went up almost every single day. January rates started to go up a little bit, but they really started to take off in February and March. And you can see why, because we replaced a 0 with a 0.2. 0.2 is not a lot, but it's a lot more than 0.
Yeah.
In April, we had a negative 0.4. Come the next year, it's 0.2. That's not saying inflation is rising. That's saying it's kind of flat, but you're getting rid of a negative number, which makes it look like it spiked a lot. It makes sense of why rates went up greatly in April. So we've got some more negative and small numbers that we're going to replace with mediocre numbers, but it's making inflation appear bigger than it is. So when we look at what's happening with interest rates, the inflation forecast that is reported by the government is going to appear to be great. And when you have high inflation on a long-term investment, it erodes your returns. Well, how do you attract investors? You have to raise rates because they're afraid that their returns are going to get eroded because of inflation, so you raise rates. So we've seen rates go up, and we expect in June and July to see additional increases in rates. Right now, it has been pretty calm this week and this month, but it could change again quickly. But then we think in this, fall and the winter time, we'll see those numbers coming back down because we're going to go back to normal numbers, replacing normal numbers, not negative numbers. So, you've heard a couple of the Fed chairmen say, any inflationary data we see should be temporary. Any steam in the market that you see should be temporary. A lot of people think that we're going to pay the piper for all this stimulus and all this. I mean, we've just lifted the economy up on stilts, and those stilts could not get knocked down at some point. We could see it fall back, and I think a lot of people expect that. But interest rates we expect to continue to go up through the end of the summer, and then come back down. And then I'll let this slide speak for itself. You guys have heard me talk about this for 5 years. The average first-time home buyer is 33. And when we first started talking about this, it was a couple of years ago, and we expected that we were going to have more and more first-time home buyers. Well, we are further along in this chart. We're right here at this yellow or this red arrow. And the next 4 years, we have a tremendous amount of first-time home buyers coming of age. So this is how many people each year will turn 33, which is our first-time home buyer. And then we're going to see about 7 years of declining numbers. But during those declining numbers, we remain above where we're at today for first-time home buyers. So people ask me about a bubble, about what's going on in real estate. Is it too late? And my thought is that today might be the cheapest day ever to buy real estate. We may not see a crash that gets us below right now. And if you look at a headline, a real estate report card, this shows us household formations. This is the Charlotte metro area, or actually this is the Mecklenburg County. And it shows household formations. So people moving out of home, right? They're starting families, they're leaving mom and dad's basement, they're getting their own place. 16,090, that's based on 27 to 35-year-old population. Number of first-time home purchases to be taken from inventory is 9,400. And then the number of homes being built right now is 9,100. Well, if we're not building homes as fast as we are occupying new homes, we're going to have an inventory issue for a while.
Yes.
And there's not supplies for builders, and they're not getting permits fast enough.
And these numbers are really common across the nation.
Yes. And that's, I mean, it's insane how little inventory there is. And I got in the business in 2013. If you go back to the slide, 2013 was about here. We had increased inventory the first year I was in business. This is 2014. And since then, it's gotten worse every year. I remember last year, at the beginning of the year, we were talking about, oh, there's only 1.6 months of inventory. This is going to be a rough year. And this year, we started off with around a month of inventory. And I think right now, we're somewhere in like the 18 days worth of inventory. And any house that's not drastically overpriced, most are overpriced, but the ones that aren't drastically overpriced, they go in hours. It's insane. And we could get some guidance from some of the real estate agents on here to confirm I'm not making this up, but it's a crazy market. And this is nationwide. This is nationwide. There's no homes. I think I read an article that there was like 3 times the number of real estate agents as there was homes for sale in the country. Some crazy number.
That doesn't surprise me.
It's crazy number. So we may see this environment for a while. It could hurt for a while. And then other major news is the oversight committee from FHFA. That is who is running Fannie and Freddie since they're in conservatorship. They announced that based on the Treasury's guidance, that they needed to reduce their risk portfolio and their risk profile. And they said, we're only going to buy 7% of mortgages from mortgage companies and banks that are labeled second homes and investment properties. So we've seen the cost of second homes go up. They used to be the same exact rate as a primary residence. Now it's slightly higher. And investment property, we've seen those rates go up a lot because banks have had to curb their lending. For a short period of time, we stopped doing refinances on second homes and investment properties because we had to reduce our production of those. We were at about 10% production, so we had to trim down. Now we have found some new investors, some new banks that are willing to buy some of these assets from us. So we've opened back up the refinances, but we still have higher rates than we did prior. I had quoted a guy right before these headlines. I quoted a guy high 3s for a 20% down investment purchase. After the day after this announcement, everybody reacted. Some places stopped doing lending altogether. Some places just raised their rates and fees. I quoted the same guy 4.75 with 2 points, where
Wow.
he was at like 3.875 with no points the day before. And we didn't have a contract, so we couldn't lock a rate. So we didn't have an address. But it's going to be some more news. I just heard whispers that Freddie is going to lower their number back down to 5%. They're going to even be more conservative.
Wow.
So we'll continue to see changes, but you now have places like Carolina Hard Money, Lending One, Lima One. There are other places that will do long-term investment financing, and it may be closer now to what Fannie and Freddie money looks like, where Fannie and Freddie used to have a real distinct advantage. It's hard. It's just hard in the marketplace now.
Yeah. You got another question from Rick. He's a lender, a good lender, really good lender. So Rick Bressler, just in case you guys want to get up with him. When you add PMI to Fannie Mae loans, Fannie Mae and FHA loans, it would seem that the non-QW may be a better bet in the long term, save for the down payment. We can get rates down to 3.85 on a non-QM loan. He's right. I've been seeing that go crazy, actually.
Yeah, you're doing the 15% down. Now, the one nice thing about Fannie and Freddie, it's not a life sentence for PMI. It can fall off after 2 years, or if you pay down the principal balance, it can fall off 2 months if you paid it down yourself. A lot of times, there's new marketplaces opening up, and a lot of times you can find some alternative lending that's going to be real appealing right now. So I would just watch out, and I don't know the case on that QM product, but just watch out for upfront fees and for early payoff penalties.
Yeah.
Because those are
there are points to pay.
What's that?
Yeah, there are points to pay to buy the rate down.
Right.
And how much is that, Rick? What are you saying?
It's FICO driven. Discount points be anywhere from 3.5 to 4 to get all the way down to 3.85.
Yeah.
So if you're going to hold it for a long term, it pays out in about 2.5, 3 years. If you're not going to hold it long term, then it's definitely not worth buying the rate down.
And I'm not a fan of paying points down on primary residences because oftentimes it takes like 7 to 10 years to break even, and most people can't write those off. But when you're doing investment property, you have a new bucket where you can write those off instantly, even if you can't itemize. Talk to your CPA, your mileage may vary. But a lot of times buying rates down on investment properties, the math is different than a primary residence. So it can make a lot more sense.
Good point. Good point.
And if you're 1031ing, all that, you can use all that money that you had to get rid of anyways. So it could be a great opportunity to use up some of that 1031 money if you needed to do, if you want to get as much lending, as much finance as possible, use it on some fees to buy the rates down.
Yeah. Good point. All right.
That's all my slides.
Well, I'll tell you what, that was incredible.
A fire hose.
Yeah.
I did
Well
it quick.
said.
I did it quick, so I know we didn't have a lot of time.
No, but you did, and Joshua wants to ask a quick question, and I want to get Dawn in here. Dawn, are you in a place where you're not going to go away? Are you walking right now?
No, I'm at the table.
Okay, then I'm going to let Joshua ask his question, and then I'd like your 2 cents, Dawn, on where you're seeing the market.
Okay.
All right, Joshua.
Hey, so you had made a comment about using existing assets for down payment. Is that something to where you can use that in place of coming up with cash? Like, say, for example, my current primary residence, I owe about 190,000 on, but based on some of the current sale prices, I'm guessing it's probably around 300,000 in value, and I wanted to go buy another property but didn't have the cash for the down payment. Could I leverage that equity for a down payment?
Heck yeah, you could either do a cash out refinance on that property, or you could go get an equity line of credit put on the property and use that. In the equity line of credit, we just have to get a letter from the bank that says what the minimum payment's going to be once you draw that amount out. And we have to have that letter. Some banks don't like writing letters, but we need to know that your debt to income is not going to be affected in a way that's going to make you uneligible because of the minimum payment on the line of credit. So if your bank won't write you a letter, you may have to draw those funds out long enough to have a statement that shows what your minimum payment is. So that's the only caveat with the equity line of credit. But equity lines are great because you don't pay for them unless you need them. The other flip side on the cash out refinance is, will rates ever be this low again? Maybe, maybe not. So sometimes getting out that chunk of money that you want to use and fixing the rate long term is an option. There's not a right or wrong answer for doing a line of credit or doing a cash out refinance on your primary, but either one is eligible. You can use those funds for down payment.
Okay.
Can you, put his information in the chat box again? I saw the slide up, but I wasn't able to capture it. I can.
Yes. Yes.
Thank you.
Bryan, you can do that, right? Put it in the chat box.
Yeah, I'll put it in.
Okay. Does anybody else have any questions before we get Dawn on here?
Wendy, I have a quick one.
Go ahead.
Bryan, this is kind of a first time rookie sort of question for me, I feel like, in this group, but I'm trying to do a cash out refi on a rehab, and I really want to get as close to the ARV as I can. And I've found that the banks I've talked to, it's like a frustrating combination of, we can't quite do what you're asking for. Any advice for something like that?
Yes, because we don't, and I can do a whole class on that, but because we don't have time, send me an email and I'll send you a slide of how to do that with the upfront financing. So when we do a cash out refinance, we're limited to 75% of the value of the home. When we do a straight up refinance, we're limited to 75% of the value of the home. The cash out, the difference is you have to have 6 months in the property to take full advantage of the ARV.
So my slower than expected rehab time may have been a blessing.
Sometimes there are those. Yeah, okay. So it's based on the appraisal though, and the appraisal, you're not going to get the same value as what you could sell the property for, especially today. You could sell it for higher than you could get the appraisal, because appraisals are based on history, and we're burning much faster than history will keep up with.
Right.
So you're going to be limited to what the appraised value is, so other homes in the area that are now like your home.
Mm-hmm. Yeah, that'd be awesome to get whatever you have, Bryan. Do you mind putting your email out there, or was it?
Yeah, I just put it in the. Oh, actually, I put it in the chat, but directly to, I replied to someone on accident, so I would put it in the main chat.
Okay, thank you very much.
All right, it looks like Rick Bressler has another question.
Yeah, hey, a question and a comment. First, Brian, can you flash up that interest rate slide you had real quick?
Yes.
And then 2 quick points. I got an appraisal back the other day on one of our borrowers, and for the first time on an older comp, I saw an appraiser add value to it. They added $5,000 to the value.
Wow.
Because it was like 5.5, 6 months ago.
Well, that's realistic. Good job on the appraiser.
And I never saw that before. And then to go back to the last person that was asking the question, some of the non-QM products, you can get up to 80% on a rate and term refi. So we can get up to 80% on a rate and term and down to 3.85% with 3 months seasoning. So yeah, different ones have different products, but and the other thing I was going to mention about banks real quick, some banks will make you do the loan in your personal name, which if they won't let you do it in an LLC, I would shy away from it, because now you're personally liable for anything that happens on that rental property. So you want to be able to do a loan in your LLC, or else transfer it to an LLC after you get it without being penalized.
Is this the rate slide you were looking for, Rick?
No, the one with the interest rate chart. I'm sorry, right there. Yeah, I just want to get a quick screenshot of that thing.
That's good information. And it shows how crazy everything's been. I remember, that 2008 or 2009 dip. It was not pretty.
Yeah, thanks, Brian.
Yeah, thank you for that. And then I thought, okay, I think are we good on the question so we can get Dawn's 2 cents in?
Okay, we're over time, so I'll make it 2 cents.
Sounds good.
The real issue in the market, I think everyone understands, the shortage of inventory. So if you've got a property that you can sell, there is never been a better time than now to sell. But how you ended the discussion, and Brian mentioned it as well, the challenge is appraisals, because appraisals are historical and the market is on speed. So the challenge, even if you're selling, the highest price may not be the best offer. You want the offer that's most likely to close, the most qualified buyer with mortgage underwriting. If I had a mortgage approval letter coming on an offer from Bryan Maddex, then I'm taking that one to the bank. And then does the buyer have the cash to pay the difference? Have the discussion beforehand with the buyer's agent to verify their willingness and ability to pay any appraisal shortage. So that's the market right now and how the game is being played.
Awesome. Thank you for sharing that. We've got one more quick one. I don't know if this can be answered quickly. This is from Kong. As self-employed, how do you calculate the income for a purchase on a primary residence?
That's a great question, and it could go very long.
Yeah.
But quickly, it's typically a 2-year average of the tax returns. If you have 5 years experience, or if you get extremely lucky that Fannie or Freddie will allow you to do a 1-year look back, sometimes you can use just last year, but most people, it's going to be a 2-year average of their tax return values. So if you're showing income, we can use it. If you're not showing it, non-QM may be an option to do bank statement loan.
Awesome. Brian, this has been absolutely incredible. Great information. Thank you so very, very much. It's just amazing how much knowledge you can stuff inside of that head of yours. And we're grateful that you're willing to share it with us. So thank you so much. I know that wasn't easy to put together, and you're always ready to go whenever I ask, and I really appreciate it. Thank you so much. Tom, are
My
you
pleasure.
ready to close us in prayer?
Absolutely. And I too want to thank you, Brian. I wish we had a couple of the rabbits around you today instead of, the atmosphere that you currently have. So are the rabbits good?
They're doing good. They're doing good. Yeah, one's getting a little old, so sometimes it's a little worry, but yeah.
Okay.
And in case everybody doesn't know, Bryan has these rabbits that stay indoors, and they're the biggest rabbits I've ever seen in my life. I thought they were-
Man eating rabbits.
They're amazing and they're so sweet. But anyway, go ahead.
Okay. Gracious Father, thank you for this day, Father. We thank you for Bryan and the knowledge that he's freely sharing with us. And we just pray that all of us as investors can take this information and use it for our own portfolio and our plans. And Father, just be better citizens in this country that you have allowed us to live in. And so, Father, we lift you up and just pray that all of us will take time to honor you and to praise you and just know where all blessings come from. And it comes directly from you. And we lift you up in Jesus' name. Amen.
Amen. Thank you so much. Y'all have an awesome, wonderful week, and we'll see you next Friday. We're going to talk about credit repair next Friday.
Happy Mother's Day. Happy Mother's Day.
Yeah. Happy Mother's Day to all you mothers.
Happy Mother's Day.
Happy Mother's Day. to
And
y'all.
we'll talk to you next week. Thanks so much.
Thanks.